In this video, I'm going to talk about how do you judge and determine a stock's health. What's up, Tim Sykes, millionaire mentor and trader here answering your questions. Have you ever been invested in a very unhealthy stock? Just type in yes in the comments below if you've ever been invested or if you've ever traded an unhealthy stock. And when I say unhealthy, I mean the stock isn't doing well, the company isn't doing well, you're just not feeling good about it. You know, I get too many messages from people where they're losing a lot of money, trading is hard for them, investing is hard for them, and they're just lost. Remember, 90% of traders lose, 70% of investors fail to beat the S&P 500 every year, and the S&P 500 makes roughly 8 to 10% per year. So most people in the stock market game are just wandering around like clueless idiots. If you look at the E-Trade baby commercial, you know, look how easy it is. Even a baby could do it. If it were a real baby, like a real life scenario, a baby trading, the baby would be bloody. It was in the middle of the battlefield that is the stock market. It wouldn't even be able to be shown on TV. It would be all blurred out. It would just be messy. That is what the stock market is a battlefield. And most companies are not healthy. So if you are invested in an unhealthy company, or if you've traded one and you didn't feel good about it, don't feel bad. You're not alone, okay? You're actually with the majority of people, because companies like to pitch themselves, oh, look at this amazing gold that we found. Oh, look at this amazing service. Oh, look at this amazing product. And they're basically like walking, talking billboards. Their management teams are just like cheerleaders. It's like Kirsten Dunst, whatever her name is, and Bring It On. This is not a cheerocracy, okay? You have to understand that most of these companies will lie. They will say that they're healthy when they're fundamentally not. And if you look at their SEC filings, which are required for companies to file, but they're like 40, 50, 60, sometimes 100 pages long. Most people don't want to read through them. If you read through their SEC filings, they will admit just how unhealthy they are in terms of lack of cash, lack of revenues, great risks to their business, great risks that they might not even be in business in 3 or 6 or 9 months if they can't raise additional money. They're fundamentally unhealthy. There are very, very few healthy companies. The good news is that it doesn't matter if a company is unhealthy if you have the right mindset. So for me, I just expect the worst out of every company, out of every management team, and I'm never disappointed. I know that's a cynical way of looking at life, but I wouldn't say like expect the worst out of everybody that you meet. Expect the worst of every financial instrument. Expect the worst out of every investment. What is the worst case scenario? If a company says that they found gold in some African country, what's the risk that there's going to be some civil war? Okay? If you're invested in a Chinese company, what's the risk that they've just made up all the numbers, as a lot of Chinese companies have been proven to do in the past? Expect the worst. And that way, if the worst happens, you're already prepared for it. The good news, and there is good news, even if everyone is lying, even if every company is going to go out of business, even if every company is a scam, which, you know, frankly, most are, and penny stocks, you can learn to differentiate yourself from the crowd. Where everybody else goes down with a ship, if you expect the worst, if you're nimble enough, you can ride the volatility. Buying stocks, not necessarily believing in the company, not necessarily believing in the fundamentals or the technology, just riding the hype. Okay, if a company has a big product launch coming out 2 weeks from now, buy it and expect that they're going to hype it up leading up to the product announcement. And even if the product bombs, it doesn't matter, because I want you to learn to buy the rumor and then sell the news. Don't even be there when the new product is announced, because you've already profited with the rumors during that run-up. If a company is about to report earnings, guess what? Expect the worst. Expect that they're totally going to bomb on earnings. Don't be invested in earnings. And in case you say, oh, well, maybe I should just short every company. No, because a company might bomb on earnings, but the CEO might say something positive. Remember, CEOs are cheerleaders. So on the conference call, they might say, hey, we lost 20 million this quarter, but we have a new product coming out next quarter where we can turn everything around. And even if that product doesn't materialize, just that CEO's positive comment can spike the stock. So I don't want you to short ahead of earnings either. Don't play the guessing games that everybody else plays. Learn to focus on patterns, okay? Learn not to care whether a company is healthy or unhealthy. Learn to be adaptive. Learn to cut losses quickly. If a stock is not doing well, if the stock is unhealthy, forget about the company itself. If the stock is going against you, simply follow rule number 1. Rule number 1 is cut losses quickly. That way you never let a small mistake turn into a big disaster. You can turn this game on its head and take all the negatives and turn it into positives for you because you can learn to think differently. Remember, 90% of traders lose due to lack of preparation because they believe in the companies, don't believe in the companies. Most traders go down with the ship. Don't do that. Rule number 1, cut losses quickly. There's very simple rules that I've utilized and refined over the past 20 years. This is why I teach. I want you to be self-sufficient. I don't want you to be part of the 90% of traders who lose. I don't want you to have a bad experience with the stock market. Expect the worst from every company and every management team, and you will never be disappointed. Learn to focus just on price action and patterns and probabilities. That is my take on, how to value a company and how to judge if a company is healthy or unhealthy. They're all unhealthy. They're all terrible. They all have diseases galore. Protect yourself. That's today's lesson. Leave comments underneath. Let me know if this video has been helpful for you. Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.